is the best way to get the economy moving again in a sustained way. Joining us right now, Payden and Rydel Chief Economist Jeffrey Cleveland. Jeffrey, good to see you.
Good morning, Maria.
Characterize the economy for us right now. What are you seeing?
I think there's some weak spots, but I think people are missing a lot of strength, particularly in the labor market. We are now through 70 consecutive months of private sector job growth, which I think is wonderful. And the last 2 years, Maria, in the job market have been the best 2 years since 1999. We're adding more than 200,000 per month on average over that time frame.
That's the way you see it, Michael.
Yeah, I mean, the labor market, the job ads being strong. I can argue with you, and we can probably argue about this for hours, that the rate is slowing down. But no, let's say that. Okay, job growth is strong. What I want to know is where are the wages, where's the big wage ups that come from? We see these encouraging signs, but it's not there yet. What's going to drive that higher?
And we have to point out the report yesterday, retail sales down 0.3%.
Yeah.
That doesn't tell me that anything's going so great here.
Okay.
0.3% decline.
Yeah, I think so. Take the first one
wages.
first. Yeah. So wages. I think wage growth is coming. We're seeing it perk up a little bit in the average hourly earnings. There's a tracker that I like to look at. The Atlanta Federal Reserve Bank puts out called the median wage tracker. That's up about 3% year over year.
Okay.
And so that's telling me that the wage growth is coming. And it's not unusual to not see a lot of wage growth given the amount of slack that we've had in the labor market, but that slack has been squeezed out now. We're now down 5% on the unemployment rate. I would say the real unemployment rate, some presidential candidates might want to focus on the real one. That one's at 9.8%. That's the U6 measure. That's come down dramatically since 2010. It was as high as 18%. So
wow.
The wage growth is coming. Maria, to your question on the consumer, I think there's a lot of noise and not a lot of signal in the retail sales data. It captures a small percentage of total consumer spending, mostly goods. And so I don't think if you're an investor, you're sitting at home thinking about the data, you would rely on that to build your narrative.
People who crow about how good retail sales have been, they always point to auto sales.
Yeah.
And well, autos were weak in this most recent monthly report.
That's
so
really
again, it's been one area of considerable strength that looked weak in March.
I think on a monthly basis you can get some volatility in things like auto sales, but if you look at, you smooth it out, you look at a 6-month average, you look at a 12-month average, auto sales look amazing. They've come back, roaring back, in fact, up to 17 million annualized or even higher from a pretty deep trough.
But Dagan's making the point that wasn't the case last month.
Yeah, month to month. I think that's what would be my message to investors, Maria, that month to month we can get so wrapped up thinking we're getting a lot of signal out of some of these data points, but is it really telling us anything?
Listen, the market yesterday, stocks are at highs for the year, but look at the 10-year. We're at close like 1.6%.
Yeah.
A very, very strong demand for the 10-year auction yesterday. Something's wrong with that picture. Something's got to give. You can't, long-term interest rates can't be that low and be wildly bullish on a stock market.
Markets are telling you something. That's a weak environment.
I think markets might also be telling us there's just not enough safe assets globally. That's what treasuries are. They're for investors, for corporations that have a lot of cash, for foreign exchange managers that need to store things in safe and liquid assets. Treasuries meet that need. So they might not be giving us the economic signal that they think a low treasury yield is giving us.
There's not enough liquidity either. Never mind supply. There's also a liquidity issue that says, where can I go that's liquid and safe? Let's rush into this.
Yeah.
Yes.
All right. We'll leave it there. Jeffrey, good to see you.
Nice to see you.
Thanks so much.
Thanks
Jeffrey Cleveland there.